Hi, this is Shankar from Jupiter Futures, and in this video we'll cover natural gas futures Henry Hub being traded on Nymex. And the most this is a weekly chart in front of us, and the most striking feature of this chart is the last week's green candle. It is the largest green candle in a single week in the last 1 year. So that just tells us that the positioning was a bit inaccurate going into the current month, and it has just shown that the positioning got balanced. And NG has different ways of reacting and behaving after such a large green candle. Sometimes it has a follow up with a further green candle, and many times it is a correction back to the averages. So we don't know that yet, but let us look at the support and resistance levels, which is very useful to know. Till the month of October, $3.5 level was a strong resistance, and the last week's large green candle was partly because it broke through that triple top resistance of 3.5 or a multiple top resistance of 3.5, and that for sure caused a strong and solid short covering by many of the people who were short, because the previous week's candles indicate regular short selling at 3.5 and they were winning for a long time. But last week took out those positions significantly. So the entities and funds and traders who were short uh, at 3.5 would have had to cover at much higher rates. And but at the moment we are at 4.2, and this is again a strong resistance zone, the zone of 4.1, 4.2. It's been holding for the last 1 year. And just a correction, this is a weekly chart of last 2 years, not just 1 year. So we have got the largest green candle of last 2 years in front of us now. So it could be a bullish event for the next few weeks, or it can go back down to test 3.5 level again, which was the breakout level. We will know that only in the coming weeks. However, we can trade much better by knowing where our resistance levels are. The next resistance level is coming at 4.5, and if we see prices at 4.5, those will be very good positions to take long positions off with profits, buy put options, or even sell call options. Even here, uh, the risk reward ratio for selling call options is quite good based on past data. Or one can sell futures at 4.2 or any higher level from here, keeping 4.5 as a stop loss, because uh, 4.5 has offered strong resistance multiple times. We will see if it goes there, but safe to say the levels between 4.2 and 4.5 should be used for taking profits and long positions. Even the current level is a good one for taking profits if we have been long from the level of 3 and 3.2 onwards. The buy signal came at 3.01, or let's say $3 3 weeks ago, and it has really played out nicely. And so one should take profits regularly in natural gas, because it often tends to return back to lower levels because the supply keeps coming uh, at higher levels of prices and quite strongly. So this is not like gold or something that will hold prices and go higher. Natural gas supply is really large, and prices will keep coming down after each rally. So we should keep that in mind. Thank you very much.